please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Udayan Mukherjee caught up with Lucy Macdonald of Allianz Global Investors as part of a special series, London Eye, and began by asking her how she sees India and whether she has been able to spot high-quality companies with great growth potential in a market like India.
Particularly in the technology sector, where there is a very strong domestic and international growth potential, and companies which can compete on a global stage. And that, for us as global investors, is what we're interested in, is seeing where the companies are which have really been supported and have been able to compete. And that is an area where we're still interested. I think what's changing there is for the Indian companies is that the end clients, for all of them, are demanding higher value-added service, and they are changing the scale of the projects that they are asking for. And that means that all companies need to be able to provide a lot broader services than they did in the past. So it's not just a question of outsourcing or even consultancy. It's a question of delivering very wide service offerings and digital transformation projects which are taking enterprises and moving them completely into a digital space. And that means having capabilities in cloud, in security, in automation, in all of these areas which the service companies wouldn't traditionally have, but they're going to need to do if they're going to be competing on the world stage.
The other theme which people in India back home are very excited about is the domestic consumption theme. But do you find good companies there as prospects in your investment basket, Indian consumers?
Yes, I mean, our specialists in the area like the jewellery space, and that looks to us to be one which has got quite good demand growth. Even some of the areas which are sort of slightly lower growth are seeing slightly better prospects now in the rural areas, like some of the food companies, which have been a little bit depressed. But that seems to be picking up now. But there's huge potential, structural potential for consumption in India, and it's finding the companies which are both there and externally which are really able to benefit from that.
I come back to those external risks that we spoke about. Some global investors have begun to fret over issues like Argentina, Turkey popping up here and there. Do these have the potential to insert far more risk or volatility into the market, you think, in the foreseeable future?
Yes. I think the biggest geopolitical issue that, as I mentioned, is trade, because that's the one that can have the biggest impact on overall global GDP. There are many incidents which happen around the world which are very dramatic, or can be very tragic, but they don't necessarily have a big impact on the overall economy. And at the end of the day, when we're investing, that's what we're interested in. So it's trade and any real disruption in trade, which is the big concern at the moment, and seeing how that escalates or not between China and the US, and how other companies get hit in the meantime by that is something that we're focusing on a lot. And one area in particular focus is the technology area, because there are big, long supply chains which go across the world, which can be affected by this. So that's one area we're looking at. Within that context, however, and if that is one of the biggest risks to growth, India looks relatively well placed because it's got such a good domestic focus. And that, I think, from the global investors' point of view and emerging markets investors' point of view, means that they will go to India when they're concerned about some of those big worries globally. So in fact, India can be a relative beneficiary of some of that.
Let me ask you about the US bond deal, because that's consuming a lot of investor attention these days. Do you think most of it is played out in that run up to 3% plus, or is that something which can inject a lot of volatility yet by surprising on the upside?
Well, our expectation is that the path will be slow of interest rates up from here for the reasons that I said. And inflation picture, as far as we can see it, is relatively muted in the US and elsewhere. However, there is more upside pressure than there's been for a while, and that's both in wages, because of the strength of the corporate sector at the moment, but it's also oil prices, and that shift in oil prices over the year has been quite strong, and that is coming through in some way into input prices. So there is a bit more upward pressure at the moment. However, it's really, when it comes down to what will shift the bond yields, is a combination of that inflation expectations, but it's also supply and demand. And so that's, as we go through the year and we see the increased supply of treasuries coming to the market, that will be a big determinant of where those interest rates or the bond yields go. And for the moment, we think that will be managed. And so if there is a big sell-off, then that program will be adjusted.